Good evening, and welcome to the Perspecticast, the companion podcast to the Panda Perspectives Substack. It is Monday evening, and therefore time for us to reflect on the week that has been, look forward to the week ahead, and comment on anything a little bit more general that didn't quite merit an article all on its own. This has been a fairly exciting week, and this one is going to be even more so as we're diving into industrial automation, one of the topics that I've been dying to cover for some time. Really excited for it. Fantastic companies, exciting things happening, right? If you are in industrial automation, China is the place to be sure. And, this is a sort of excitement that rubs off onto the analysts looking at the sector, I think. Or at least it did on me. And I would highly recommend digging into the weird, wonderful, and exciting things that are happening in the space. The article is going to come out most likely on Wednesday because there's quite a lot to do. It's going to be two parts. The first one will be similar to the deep dive we did on broader car manufacturers. So it's going to be more data analytics type thing, valuations, churning, seeing what's what. And the second part will be a case study, most likely of Easton. Easton is not my preferred play in the space. In fact, the premium subscribers have seen that an automation name has been added to the Panda portfolio for the first time in its existence. It's a surprisingly hefty valuation, but these are exactly the sort of prices you have to pay in the space. And surprise is not Easton, but there are reasons for that. And Easton is maybe the best known and the best understood, best covered, and all that stuff. So it's easier to tell a story about it and then highlight how the other ones are different. So we'll use that as a kind of base case and then talk about differences to the other ones. So if this is the sort of thing that is interesting to you, please, by all means, take the leap of faith, join the paid section of the blog, because all of it will be behind the paywall. Like it's exciting, it's interesting, it's new, and also I find it very difficult to break up into coherent parts, and so in that case, it kind of just makes sense to make a paying subscriber only. Nevertheless, it should be an exciting avenue to explore. At least it was for me, and hopefully it will be for you as well. In terms of features for paid subscribers, the Panda portfolio in general has seen quite a bit of movement last week. It's been reflected, and I think people are starting to see what is being done there. And if you have any questions, by all means, ask them in the designated question spot for that, i.e. commentary section of the portfolio articles. Again, the whole point of setting up the Panda portfolio was to have not an all-weather portfolio, but a portfolio that it doesn't require a lot of active management. And so I think I wouldn't want to tweak it any more often than once a month, and ideally maybe once a quarter. Now, again, obviously the environment in China changes. It changes too frequently these days. It's unlikely that we can get onto this once a quarter sort of phase, but one can hope. And so far, the takeaway is that the portfolio is doing its job, and we're having decent performance, and more or less all portfolio metric targets are being hit more or less. Again, maybe a bit too much churn for my liking, given the purpose of this portfolio. Because, of course, in some of the private consultations, knowing investor outlook, interests, and the job that investors envisage their Asian exposure doing, obviously the portfolios differ. But Panda portfolio has never been that. It's never been a portfolio designed for any one individual in particular, not even for me. It's a sort of a generic best ideas portfolio within a concept of a roughly benchmark aware sort of setup. So given all those constraints and considerations, and given that I keep it to 15 positions only, I think it's done really well. So that section is live, up and running again. If you want to sort of take the plunge and join the premium section of the blog, by all means, please do. We'd be very happy to have you. Enjoy the portfolio show, as it were. In terms of a broader Chinese news, something that didn't make the weekly wrap, and probably should have in hindsight, was this Eye of God feature that BYD has rolled out in its automobiles, and it is truly exceptional. I'll post the video in the notes, possibly. I'll try to post the video in the notes anyway. And it's really cool, right? The fact that they're splitting it up into BYD, Denza, and Yangwang tiers is quite interesting, right? They're saying it's equipment driven, which it probably is, but I find it really quite exciting that they're finding a different way to differentiate. Now, this might be, distinction without a difference, because why does it matter whether differentiating it through like features hardware features or software features, with a sort of coalescence of the two. But actually, I find it really interesting when new business models or new pricing mechanisms are being developed, and I feel like we're in the process of that. And again, this adds to the overall excitement about what I'm doing right now. It's just things are developing so quickly and in such an interesting fashion that I, for one, I'm trying to keep up, but also I am finding it to be a very rewarding period personally. So yeah, check out that Eye of God video once I post it, unless you've seen it elsewhere. I mean, it's making the rounds on the social networks. So yeah, that's something to definitely look at. Other than that, it's already the 10th of February, so the month of February is almost halfway there. And after that, we can, it's March, which is very much NPC/2 sessions time. And we are slowly moving to the pre-NPC period. So a lot of talks, speculation as to what's going to be done, what's going to be passed. Like today, we've seen another meeting, another attempt at convincing the market that there's going to be sufficient amount of fiscal stimulus coming and that consumption is a very significant part of it. And it's all like as expected, right? The reason why I'm not typing up an article about it anymore is because it's all been said now. We just need to see it passed, right? That's all there is to it. That's all we're expecting. And the one thing I'm looking for is draft release time. At some point, we'll be seeing drafts being leaked out or inferred that, the actual policy will be X. And it is at that time that I will redouble my efforts on trying to understand what to do with that information. Is it enough? Is it not enough? And if it's not enough, what is the next step for the opening up of it? Or if it is enough, how it will actually be made available and what are the priority destinations for the spending? All of this is top of mind. Trust me. The reason why there is no speculation about it on the blog is because I don't want to speculate. I would like to find out, same as everybody else. And once that becomes a little bit more clear, then we can figure out the implications. It was fun hoping or wondering what is possible, what is feasible, but I feel like we formulated an approach about October time last year, whereby we believe that from the very, very top of Chinese ruling party, there is support for this very broad acceleration of domestic consumption and transfer of wealth, really, in favor of households. Now, obviously, that's not being formulated as such, but this is the view that we've taken, and still believe that this is exactly the outcome we're hurtling towards. How quickly we get there has always been the bigger question, right? And again, my expectation is we will see movement on this path in the NPC, and therefore I don't want any false starts, I don't want any idle speculation, I just want to see movement. But of course some speculation is unavoidable, therefore as it comes up we'll comment on it. And the most recent announcement again confirm the view that we're going to get a big stimulus. How big and how it will be directed we will discover in March. Also note that where should I put it? Everyone's best friend, the positioning report, has come out for some of the bigger US funds. And clearly, Alapalooza, David Tepper, the two main guys from the Chinese point of view in the recent months, have doubled down, or at the very least increased the allocations quite significantly to BABA and JD and things like that. So basically keeping it in the US ADRs, which is fair enough, right? I think this is another good indicator of positioning and what is going on in the market. It's not that the market in itself is like in this silly bull stage. It's going up nicely, but it's not ripping, except for some of the select names, especially the US listed ones, because that's what people in the US can buy. And as they change their attitude to China, as the shores get covered, you do get a bit of a squeeze there. Domestically listed, domestically owned names aren't really moving unless they're in the specialist industries. We had a good run in the autos, in the special electric vehicles. BYD has had a great run, obviously. BYD Electric even better, by the way. But they generally star, the Shanghai Exchange Science and Innovation Index. Obviously, that thing is ripped like nothing else. Again, all of it is very interesting and exciting, but it was obviously just a sliver of the market. I mean, the broad market is done all right. Like I was saying, It's moving, but positioning changes. We're seeing them mostly on these US listed names, and we're eager to see follow through in Hong Kong and on the mainland. But again, I feel like the biggest trigger here will be the NPC. Once the resolutions pass, once we know that it is now law and there's commitment on the government side to all the policies that they've pre-announced. So they don't even have to come up with anything. You just pass everything that's been pre-announced. That'll be the formal call to action for us investors to deploy some capital. And deploy capital we will. And again, very, very excited for that. And in the meantime, let's continue exploring the market industry by industry. I think in the shape of automation guys this week and semiconductors next, we will be covering one of the prime beneficiaries of the coming policy changes. So I feel like this is important work that needs to be done now, and I hope you share that view. As usual, do please sign up to the blog if you find this interesting. Obviously, the more subscribers, the more of a signal there is in terms of interest and the more time I can dedicate to it. And in general, it's always nice to see that people enjoy the content. And this is, after all, why we do it. And have a lovely week. And I'll speak to you next week.